All right, folks, welcome to the long awaited trade recap, which went to a loss. As you can see, we took a short on EURUSD. Today, our bias was overall short because of the short term draw on liquidity being bearish. And as you can see, market overall did plummet to the downside. Obviously, welcome to the CRT Inner Circle Traders world. Although we did go on a loss, but you don't have to take the same exact trade as me. You could have the buys as me, but you could go enter your own way. I know some people enter this rejection block. Somebody texted me, yo bro, CRT Inner Circle Trader, why did you not enter on that OT rejection block entry? Somebody took that. Yeah, although, okay, I give you guys my buys, cool. You don't have to take my same entry as me. You could have my buys, but you could find your own way to execute to the downside or upside to the buys that I have. You don't have to take the same execution as me. Somebody took this rejection block to the downside. Why? Because rejection block was at 0.62% mark of the OTE. So somebody took that to the downside. Somebody took this 0.50% mark to the downside of the OTE. So you can take my own trade, same as me, or you could take my bias and have your own trades to the downside and go around that. And when you guys are taking my trades, I don't give a fuck if you guys lose. I don't give a shit if you guys win. Because I'm not you. You're not me. I don't go here controlling your trades. You don't go here controlling my trades. And if anybody tries to come here advise me in the live stream, I will kick you out. I will ban you. So I haven't had that problem happen to me, but just to let you guys know. In EURUSD today, we had a overall shorting bias. We had a lot of context to the downside. It was a beautiful day. Although some people were looking for a TGIF today, just looking for the market to consolidate, that would have not happened. During this price point, market was all over here. When we were all over here, market had a big wick. It needs to be closed in the fair price because market only has 4 weeks to close. The ways could be like this. All right, let me go and make the right candle. Or it could be like this. Dominant in one side. Or it could be like this. Dominant in one side. Because see this one, they're still closing in a wick, but it's overall dominant in one side. This is overall dominant all the way without having a big wick there. And those are the only ways how a candle could close. Here's another way. I forgot the example of that one, but there's definitely another way here. But enough of that. And today you can see the short happened here. We took a loss. A lot of you guys wondered, man, how the fuck this going to loss? It looked beautiful. Well, how they going to loss? CRT, Inner Circle Trader. The reason it went to a loss is because of rules. I broke my valid high, valid low trading guideline rule. And that rule is literally, if you focus on that rule, that's all you need. But personally, it's not about that rule. You should follow every single rule. And that rule is literally one of the most important. Because why is that rule important? Because you will avoid getting the trap of the 3-drive ICT pattern where the market will make a high, another high, then go lower. How do you know will this high not get reversed? By looking at the highs and lows. Some people, Romeo called this the lower time frame price action at the higher time frame key level. But the simplest way is just by looking at the high and low of the CRT. Sometimes it could go high, 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 then go lower. How do you know which one we do, reverse to? Simply by looking at the high. That's why high did not have a valid high. Neither this one did, so market went lower from there on forward. And you're probably wondering, well, how the fuck is that not a valid high? It's obviously a bullish bearish candle. Okay, is a equal high though, but both the equal highs is a bullish bearish candle, bullish bearish candle. How come is it not a valid high? The reason it's not a valid high here is because it's equal. Equal highs, equal lows are not valid highs and lows. How? There's new generating resting liquidity. What I mean by equal high, equal low is by the same tick number. So same number, not like, let's just say there's a low here, other lows right over here. That right there is not an equal low, by the way. That is not an equal low. That's probably some sort of SMT. What I'm talking about is literally the same number here, the same number. Like literally the same number. That right there is actually equal high, equal low. But that right there, that equal high, equal low does not have enough generating liquidity. How come does it not have enough generating liquidity? What it does is people put a stop loss right on the side of buy side or sell side liquidity. When you put the stop loss right on the buy side / sell side liquidity, and when the market makes a same tick number, it stops them out. And there's other traders that are still in a trade there to the downside, but other traders have their stop loss a little higher. And when they make the equal high, they're taking a portion of the buy side liquidity. So, there's not enough resting liquidity there now for the market to go push lower. What the market likes to do, well, if it doesn't have that, it will go press it out one more time, juke people out. Now, as I said, it took a portion of that liquidity. Now this right over here has enough resting liquidity for the market to go lower. If this is not, but you're probably wondering, well, market took out this liquidity. Now there's new sells here, so why is it not going? Why is it running back up? Because market needs to take out liquidity again. That liquidity wasn't enough for the market to go lower. So market needs to come back, taking the liquidity, so pressing out a valid high here. After pressing that valid high, then market will perform its move. Now market took enough liquidity, then eventually plummeted to the downside, meeting our drawn liquidity for the day. And when that did happen, market never offered us our entry. It did give us an entry here, but it was a body, and you guys know we don't take bodies unless it's a consecutive candle. We didn't take it, but market did offer a setup, and that setup did perform, but that's not my type of setup, so I'm not gonna count it. And you can see not a legit high, pressure it out, go lower. Now here's a legit high, so I'm looking for the legit high to get repairs, boom, and went down lower. So now market went down low from here. But I wonder, well, that's some bullshit theory, T. Some bullshit theory. That's some bullshit theory. No, it's not. We go back in time to show you guys right over here. Press it out once. And eventually this one did not have a valid high, but well, there's a bearish candle there. That's from a different 4-hour candle range. That's from the 9 a.m. 4-hour candle range. A whole different candle range. So market makes its high. Not a valid high. Eventually, once it does take out the liquidity, it does not leave a bullish bearish candle. So not another legit high here. Boom. Now presses it out again. Now leaving a legit high there. Now market goes all the way back up, pushing out that high. Then eventually go now lower. So now when that happens, you're avoiding this. You're just looking to take a trade once you push out this high. So now this makes it more clear. But then, well, whoa. How do you know the specific price point of the chart that happened? So, I have evidence, man. I got evidence. I know what I'm doing. I don't need to get external validation. I don't even have to show you guys that proof. But just to some STD people who are confused, I will show you guys, you know, because I got evidence. Obviously, evidence proof is what you need in this industry to succeed. And you can see equal highs took out liquidity. What I mean by equal high, are basically the same thing, same tick number, not, you know, like this or like this. I need the same tick number. Those equal high, those are actual equal highs. Those equal highs does not have enough resting liquidity for a valid high, valid low purge. You can see it did get purge here, and same thing over here. There's a 6 a.m. CRT high. Did not have a valid high, so looking for how to get purged, which it never did get. It never got repurged. But as I said, nothing is guaranteed. It's all probabilities here. Market went lower. Eventually, I was like, okay, so it's not gonna offer me this on my app. We have another hourly candle range we can take a trade out of. We took a trade. We won the loss, but we never supposed to be in a trade there. Eventually, market went down lower. Goes down lower, I mean. And you can see, in this case, it worked out, but over the long term, it's not gonna work out. You can see over there, if you were to enter the, you know, without the valid high, valid low, you would have had 3 losses in a row, which you can't exceed 3 losses in a row in a challenge account, funded account, right? I think it's per trade. If you take a 3 different trade, you should be chilling, but you can't lose more than 5% per trade. I mean, 5% in a day. As you can see right over here, not a valid high. It still performed. I think nothing is guaranteed. It's all probabilities here. So we're looking to take the higher probability, which occurred right over here, and market went down lower. See how this one performed very well. And yeah, so now let me give you guys a top down answer to this trade, and eventually give you guys a lesson. This is already long, 11-minute video, but it's all worth it, right? It's all worth it at the end of the day. On the weekly time frame, we have a weekly IRL to ERL, weekly CRT to the upside. On the daily time frame, with daily IRL, premium IRL. So now that's a long-term look to the upside. The long-term look today is probably going to change back to being bearish because our weekly fair value gap are inversed. We have now that's the long-term general liquidity, which we can't determine if that's going to happen unless the candle closes. But in a daily time frame, the short-term general liquidity, which we prioritize always, because the short-term general liquidity always leads to the long-term general liquidity. In the short-term general liquidity, we had a daily IRL, premium IRL to discounted ERL. We as well had a daily CRT to the downside. We as well had a daily SMT CRT to the downside. And we had a midweek of Russell Wednesday high was protected because of the SMT divergence. On the 4-hour time for the market context and narrative, we overall had a bearish order flow. We as well had a 4-hour developer CRT. The scanner state of CRT, only the low got purged first. We just have a double purge here. So our drawn liquidity is low right over here. The low that purge out the double purge. A 4-hour key level is 4-hour order block. We're looking for a near continuation because let's should make the high of the day. We're in the premium region of the daily range. Market push out a high, push out a low, stable high, stable low, premium discount. We're in the premium of the daily range. So we wanna go down the daily range low. Now that's the market context right over there. Now if you go to the hourly time frame, we had no 4-hour candle range, so we'll have to go to the hourly time frame to use a smaller range to target that bigger range. We're just using a smaller range to just execute to the bigger range. On the hourly time frame, we first had a 6 a.m. as our CRT. Purchase it out, but it's not a valid high, so market number purchase out the other valid high. So I'm looking for another range. You're probably wondering, well, this is your hourly range. Why you're not, you shouldn't even be in a trade here, unless there's an SMT divergence or something. No, because we're using this smaller range to execute in this bigger range. Since this smaller range didn't give us the actual the right execution to go to the bigger range, we're gonna look for another smaller range to execute to the other bigger range, which is overall this CRT right over here, this big range right over here. As well, in the 4-hour time frame, we had SMT with the range high, move down to range low. How comes our range high? Daily CRT high. How comes our range low? Daily CRT low. We had SMT with it as well. And today was stacked with, you know, a lot of confluences here. Now, if you go back to the hourly time frame, so this one didn't offer us a CRT, so we're waiting for the 8 a.m. candle to close. The 8 a.m. candle high gets pressed first. Eventually gives us the model 1. After the model 1, eventually you can see the 6 a.m. I mean, I went a little too far ahead there. 6 a.m. No, as I said, the 6 a.m. never gave us the actual entry we wanted, so we waited for the 8 a.m. candle to close. 8 a.m. candle closed. 8 a.m. candle high got purged, but at the 8 a.m. candle high, there was never a valid high there, so market goes back lower. Give us our entry, so I thought, okay, we're still valid because, you know, there's equal high. Both of them have a bullish bearish candle. I thought we were fine there, but seems like we're not at all. Made a mistake. We entered there. Put a stop loss here because the market did a big impulse to the downside. Okay, I was like, okay, market is high likely not gonna go back to the threshold. So putting a stop loss like that was fine for me to put it. It says the market wasn't gonna go all the way down here. Our additional entry, initial entry was gonna be overall the Mod 1 itself, but I was like, okay, I'm not gonna enter that trade. I'm gonna enter when it taps a CISD, which is the body. I could have entered all the way over here, but that's too far. In this case, we're just entering the body of the CISD, so I was waiting for that to happen. We had we executed 2 trades on there. And first entry hit it, which was at our first entry was at 9:41, and the second was at 9:34, which is put at 34 just to, you know, put it like that. Eventually, market stopped out both. And then when eventually market pushed out the legit high here, then went down lower. Now, what's the lesson over here? The lesson is the legit high, legit low at the CRT high, CRT low. It can only be a bullish bearish candle or a bearish bullish candle. For a sell side liquidity, for a buy side liquidity, must be a bullish bearish candle. There cannot be equal highs. There cannot be a swing high, swing low. There cannot just be a random candles. And this is actually a new scenario that I encountered. I never knew the scenario. I never faced this scenario before. This is my first ever time facing this scenario, so I'm actually very happy. So now I know, okay, it's not just about the swing highs and swing lows being there. It's about not having swing highs, swing lows, and equal highs to equal lows, as well as not having random candles. I did before have a equal high, equal low type of scenario, and that equal high, equal low, we did get repurged. But during that time, there was no, you know, the when they made both been equal highs, there's 2 different things there, right? So the first one was just equal high, bullish bearish candle. Second one, when they made the equal high there, make it, you know, to make an equal high, it was just a bullish candle, 2 bullish candle, and one of them made an equal high. The one just made a little higher, but it went down lower. So there was no bullish bearish candle on each of them. So now I found out that, okay, for a valid high, it can only be bullish bearish candle or a bearish bullish candle for a sell side liquidity, bullish bearish candle for a buy side liquidity. There cannot be a swing high. There cannot be a equal high. Doesn't matter if it's bullish bearish candle on each. It can only be a buy side liquidity or a sell side liquidity, which is bearish bullish candle or bullish bearish candle. Otherwise, I do not execute the trade, and I'm just sidelines until I get a repurge, or I'm done for the day and I don't execute the trade at all. You can see not a valid high. Now eventually made a valid high here. So market pushed out the valid high. Eventually went down lower, hitting our drawn liquidity. I mean, a lot of you guys made money on this, which is great. You know, I lost money on this, but most of you guys made money on this, which is nice. You know, overall we were correct, but execution wasn't there, which is listenable, right? We just learned here. We're still in our early stage of our journey, still learning, which is fantastic. But yeah, that's the lesson. We had no psychology problem. We had nothing but just a technical, which was the lesson is at the CTI low, it can only be bullish bearish candle or a bearish bullish candle. If it's not a bullish bearish candle or a bearish bullish candle, I'm looking for a purge of that candle, and I'm looking for a repurge of a valid high, valid low, then go lower, higher, and eventually execute a trade. Otherwise, I do not execute a trade. I will stay sidelines, or possibly I will take the trade and just call it a day or call it a week or whatever. So once again, the lesson is at the CRT high, CRT low, at the valid high, valid low, It must be a bullish bearish candle or a bearish bullish candle. It cannot be an equal high or equal low. It cannot be a swing high or swing low. It cannot be a random candle. It must be bullish bearish candle for a buy side liquidity, bearish bullish candle for a sell side liquidity. Why? Because there's not enough resting liquidity on a swing high. It's not enough liquidity in an equal high because it takes a portion out of liquidity. A swing high takes out a liquidity beforehand, and the bullish bear, just a random bullish candle or bearish candle, doesn't have enough liquidity resting on them. So what have enough liquidity? A valid high, valid low, which is bullish bearish candle, bearish bullish candle. That right there tells you, okay, there's enough liquidity there to be moving because it didn't take liquidity, it didn't take a portion of liquidity, and it has enough liquidity there. And eventually when that happens, then we can execute a trade, the upside or downside, depending on our bias. Then we can look for the model 1 as execute a trade. Otherwise, we do not execute. So yeah, we cannot take a valid high isn't an equal high, equal low, or a swing high or swing low. It's not just a bullish, it's just not a bullish or bearish candle. It must be a bullish bearish candle or a bearish bullish candle for a sell side liquidity, bullish bearish candle for a buy side liquidity. Otherwise, we don't take any trade. Thank you for watching. Make sure you guys like, comment, subscribe, share, and join this course down below. And I'll see you guys later. Peace out.